Ladies and gentlemen, I welcome you all to the Q1FY25 post-earnings conference call of Suyog Telematics Ltd. Today on the call from the management we have with us Mr. Shiv Shankar Lature, Managing Director, Mr. Tushar Shah, Business Head India, Mr. Ajay Sharma, Chief Financial Officer, and Mr. Suyash Lature, Business Development Manager. As a disclaimer, I would like to inform all of you that this call may contain forward-looking statements which may involve risk and uncertainties. Also, a reminder that this call is being recorded. I would now request the management to quickly run us through the presentation of the company, the business and performance highlights for the quarter and the plans and the visions for the coming year, post which we will open the floor for Q&A. Over to the management team.
Hi everyone, welcome to Suyog quarterly call. First, I would like to admit, yes, we are doing it after a long break, but going forward, we will ensure we do it on quarterly basis. I'll start with the presentation to brief everyone of you about the company. So, we are a public listed company. We are into a telecom field where we create telecom infrastructure for all the top 4 mobile operators of India. Currently, we get revenue of around 49% from Airtel, 23% from Jio, 26% from VIL, and others is 0.4%, mainly BSNL. We have presence across India except Bihar, Jharkhand, and AP, where we don't have presence. And we have close to 5,100 plus tenancies and 4,300 unique towers. We can go to next slide. So these are exact Q1 numbers. We have presence in 26 states and UT. Unique tower count is 4360. Our total tenancy is 5144 as of Q1 exit. 3818 is small cell out of the total tenancies, and we are very strong. We are US-based government and fiber. So we have 900 plus government tenancies and 5,000 plus kilometers of fiber network across India. Shiv Shankar Lature is our co-founder and managing director. I am business head India. There is one more business head, Mahesh Rajure, and Ajay Sharma is the CFO as a core team of Suyog Telematics Ltd. Our journey, we started Suyog Telematics Ltd on 20 July 1993-94. We worked as a TSP vendor for many years for BSNL. We installed around 5,000 plus towers for BSNL. And then in 2008, 2003-04, we started working for private operators like Airtel and Vodafone and Idea, which was a separate company at that point of time. In 2008, we got IP1 license and we started working on IP1 model, post which we have completely stopped EPC contract. Now all my revenue is 100% from IP1 business. We got listed on 2013 and 2014, we got listed on BSE. Overall, as just explain the business model, we get a list of sites from mobile operators where they want tower across India. My team goes and find a suitable building or ground where we can install mobile tower. Based on our feedback, a technical team of operator will go do a proper technical survey and share me a report stating whether they want GBT sites or RTT sites, based on which we'll sign agreement with site owner and will invest capex and build an entire mobile tower passive infrastructure. And that site will be handed over to mobile operator for running of active equipments. That's the entire process. So we take these space on this and we give space on this to mobile operator. My scope is only passive, which is tower installation, power supply, and fiber. All active parts are part of operator's equipment, operator scope. We can go ahead. Vinay, so this is a very key step for all the investment. How do I get my revenue? So we have signed master service agreement, which is for 15 plus years with all the 4 mobile operators, Airtel, Jio, BSNL, and More Idea. Master service agreement has 4 categories of revenue charging. One is IP1 fees, which is actual revenue, which is for capex which I'm investing. Operator will pay me IP fees month on month basis. Now IP fees already predefined in MSA. If there is a 30-meter ground-based tower, IP fee would be X. If there's a rooftop tower with T2 tenancy, IP fees would be Y. It's already predefined. I don't need to go and negotiate for each tower. It's predefined in multiple categories. Second part is site rental. So whatever I pay to site owner as a rent gets reimbursed from operator on back-to-back basis, on actual basis. Third is loading charges. Suppose by all sites, if you see before 1.5 years, were 2G and 3G sites. Now, since last 1.5 years, they are rolling out 4G and 5G. So if they want to add any antenna, they want to add any weight, any new technology, they need to pay me loading charges, which finally becomes part of IP fee, which is also recurring charges. Again, it's predefined in MSA for X weight, X number of antenna, X technology, they need to pay me out. And fourth is utility charges, which is nothing but electricity and diesel. It's passed on to on actual basis to mobile operator. IP fee, site rental, and loading charges are part of my top line. Utility charges is just an actual reimbursement, which is not part of my top line anymore. The best part of this model is from the day one, before even I invest even 1 rupee on my tower, I know what is my ROI. Because all charges are predefined in MS. So we don't need to negotiate for every tower. So this is one of the few models where you are aware of your ROI even before investing in the tower. And we have 2.5% inbuilt escalation year on year for the IP fees. So as I earlier said, my USP is government sides. We are very strong in government side. We have a lot of government tabs with BMC. We have government tabs from multiple wards. We have exclusive right on MMRDA, footover bridges, skywalk across Mumbai. We have signed pan-India agreement with National Highway Authority of India. In Mumbai, we have done agreement with BST. And we are doing same government sites replication in West Bengal, Gujarat, and now even we are trying Madhya Pradesh. So there are multiple states where we have government tabs, which are very hot sites for mobile operator because of their locations. And we have one of the biggest government portfolio among the industry peers. We keep doing a lot of innovative sites year on year. One of our best innovation was CCTV sites, which we had done 1.5, 2 years back. We started a project of CCTV site where we installed 12-meter pole on road. We installed 6-meter CCTV on 6 meter at our own cost and hand it over to local BMC and police station. At 12-meter height, we installed a small cell, which is subleased to mobile operator. This model was so hit that Gopal Vittal himself came on one of my sites in South Bombay, and he asked me to replicate this model across India. That's how we entered Maharashtra and West Bengal with the CCTV model. Benefit of this model is police is dependent on your pool, so no one will terminate these sites. Plus, the locations are the location where we are not able to get any normal site. So it will have a high tenancy ratio because it's a very needed site for any operators for many years now. Again, we are master. We have, we work on a niche area as per our strength. We don't go and fight with Indus Tower on all these sites. Slum area is my biggest strength. If you see Mumbai, 70% is slum. West Bengal, there are high slum areas. Maharashtra, there are slum areas where no other IP company enters. We go build a site and sublease it to mobile operator. And if you see the revenue of mobile operator, if you take any site in Nariman Point, that will not have very high revenue. But a site in slum like Dharavi or Malvan, we will have very high revenue. Because mobile is the only source of entertainment or study. They don't have Wi-Fi in their slums. They don't have landline. So only thing for everything they use mobile, and that's why a site in slum will have a very high revenue compared to a site in Nariman Point, where you have Wi-Fi, you have landlines and everything. So all my sites will have a higher tenancy because of the locations. Again, small cell. We were the first mover in small cell. I started installing small cell across India for Bharti Airtel even before any other competitor, including India, started. For 1 year, we were almost only IP company to deliver small cell on IP model. That's how we expanded from Mumbai, Maharashtra to pan-India presence we got because of our small cell runner. We were very first mover in this industry, and we have highest number of small cell, which is now 3,800 plus small cell across India. And small cell is future for 5G, 6G. Operator wants to become more and more closer to customer. So along with macro site, they will also roll out small cell in high numbers to give you a better 5G services. And we are master in small cells. This we can skip. We have everything in our portfolio. For mobile operator, we are a one-stop player. Like if they want ground-based tower, they want rooftop tower, they want cow. Now we also started fiber and FTTH. So whatever operator wants to create a stable and healthy network, we will have everything in our portfolio. So they can just come to Suyog and say we want XYZ thing and we can deliver to them. So as I said, we work with all the telecom operator, Airtel, Jio, Vodafone, Tata for some B2B link and BSNL. We can skip industry, right? So this is a key set for today's call. What is my near-term strategy? So we are sure we are going to deliver 4,500 plus sites in current financial year, which is FY25. We have planned around 3,000 plus macro tower for Vodafone and BSNL, for which we more or less we have confirmed agreement with both of them, and we are sure we'll deliver them. In Mumbai, since it's an MTNL, we have already got 500 plus list, and we may go up to 1,000 also for MTNL Mumbai. Along with that, we are working with all the operators for small cell rollout, which would be 1,000 plus. So right now my tenancy is 5,100 plus, and by end of FY25 will be very close to 10,000 tenancies, which will be almost doubling my tower. So in same proportion, even my revenue will move. And this we are surely delivering. And if you see a longer vision of a company, we already have mobile towers in urban cities. We are very aggressive in rural market with Airtel and BSNL, where we have installed 500 plus rural sites across India. Even this year with BSNL, we are going ahead with the rural strategy, where no other IP wants to enter right now. We have already started FTTH vertical, which is just one baby. And we are sure FTTH will be a big boom after 2 to 3 years down the line, because everyone will need fiber inside their home for security surveillance, for internet connectivity, for mobile connection. And we have already signed term sheet with few of the telecom operators, and we'll go very aggressively on FTTH and fiber, which is a backbone of any 5G and 6G network. We assume a 10 to 15% of revenue down the line 3 years will come from a newborn baby, which is FTTH and 5G, the fiber. As I said, BSNL is one of our very key customer for coming down the 2 or 3 years. I have never seen government supporting BSNL like they are doing right now. BSNL is run like a professional private company. We have already entered into agreement with BSNL within 10 years locking from FY24 on FY25 onwards. We have got 10 years locking from BSNL. We are only one of the few IP companies on which BSNL is banking for a massive network rollout. They've already placed 1 lakh tower order to Tejas Networks, out of which 40-50,000 are new build towers. And we are expecting a lion's share of the BSNL rollout across India, which now includes also Mumbai and Delhi circle, because on grounds they have merged Mumbai and Delhi with BSNL. So these BSNL, as I said, we have signed 15-year agreement. We have 10 years locking, including Mumbai and Delhi. And the other 0.4% revenue, which we have seen in first year, will change drastically. We will see a big jump in revenue from Vodafone and BSNL for next 2 financial years. Our growth drivers are same, mobile towers in urban, in rural, FTTH and fiber. We are going to work on all these 4 verticals, and will surely have a massive growth in coming years. I think everyone must have seen financials by right now. So if you want, we can move to question and answers session directly.
Sure, sir. We'll move to the Q&A. Although you wish to ask a question, may use the option of raise hand. Those who are unable to do that can drop us a message on chat, and we'll invite you to ask the question. We already have a few raised hands. We'll take the first question from Mr. Sudhir Bheda. Sudhir, you can go ahead, please.
Yeah, thank you for the opportunity, sir. And good afternoon, and congratulations for a good set of guidance you have given. Sir, my questions are like, your current towers are 4,360, right?
Right.
And out of that, 3,800 are small cell towers, right?
So 5,100 tenancy, 3,800 is small cell tenancy.
Small cell. So what are the other towers apart from the small cell?
Which are macro site, which are full site, which you see on a terrace or the ground-based tower. All other are macro site. So towers are divided into 2 parts. One is macro, one is small cell. So balance is the regular macro sites.
Okay, balance is regular macro site. And the current year addition you have projected at 4,500, right? So 3,000 you are projecting from VI, Vodafone and BSNL. So out of these 3,000 and 1,000 you have not given anything, tentative plan.
So I'll explain you. 3,500 are the macro site, which will majorly come from Vodafone and BSNL. 500 is MTNL. So put together 4,000 sites will come from BSNL plus Vodafone. BSNL is rolling out only macro site right now because they are doing 4G rollout. And out of this 4,000, even we have considered only macros. And the 1,000 which I am saying is in small cell sites, which will majorly come from Vodafone and Airtel and Jio.
Okay.
Because they are only about small cell sites right now.
Okay. So in all together, we'll be installing 4,500, which will be like doubling of the tower capacity.
Right.
So just not to go for 25 revenue, because then on the latter half, because first quarter, there were not much execution that we can see from the revenue, because revenue has not gone up substantially. So that means 4,500 you will be installing in the next 3 quarters, right? Second, third, fourth.
Right, right.
So that will have a full year impact on 26. So what is the 26 number will be look like? If you can throw some light on that.
Higher than 320 crores.
So we are expecting FY26 to cross 300 crores. And we are as of estimating to be 320 crores as a top line for FY26.
Yeah. And great. And the last question from my side is, what would be the capex for next 2 years, means FY25 and FY26, to achieve that kind of turnover? 300 plus.
FY26, we are as of now, we have planned around 450, 475 crores of capex. And FY26 should be a very similar 300, 400 crores capex.
Great, sir. Congrats once again, and thanks for the opportunity.
Thank you.
Thank you, Steve. We'll go to the next participant. We'll take the next question from Moksha. Moksha, you can go ahead.
Hello, sir. Am I audible?
Yeah, Moksha, you're audible.
Thank you for the opportunity. So my first question is, how does an increase in tenancy affect the revenue growth of the company? Does our revenue double when we add a new tenant to an existing tower, or is there just a slight increase after the addition of a new tenant? How can we look into this?
So whenever there's a tenancy addition, there is a massive growth in revenue. If you see a macro site, we give only 10% discount, which is around 2,000 per site for additional tenancy. And in small sites, only rupees 500 ka discount per month. So even if there's an additional tenancy, still revenue grow more than 90% on that tower. So with increasing tenancy, even a EBITDA impact will improve because capex is lower while revenue generation is very high.
Okay. So is there a statistical number on how the growth will be in the tenancies that increase?
In terms of number, actual amount I can share with you. But yes, in terms of 90% of, if you see whatever is my IPF right now on macro side, there is a 90% growth. So when I'm predicting 320 crores ka top line for next financial year, so it's around adding 150 crores for full year. If you take the effect of full year for additional 4,000 to 5,000 tenancies. So you can average out per tenancy cost and see.
And what exactly is the site running expense, which is a part of cost of raw material in P&L?
So site running expense is majorly my technicians and my spare material, which we replace like battery pack, SMPS and everything. It's an O&M expense for running the site because we have to also maintain SLAs. We have committed uptime of 99.97% to operator in agreement. So to maintain that uptime, we need to keep replacing battery cells and everything as and when required. So these are the operation and maintenance costs.
And what is the difference between the lean towers and small cell towers?
So lean tower is more or less a macro site with a higher power requirement with less number of GSM antennas. When small cell will cover only 150, 200 meters of distance, lean tower will have an average coverage of 500 meters. So lean tower are more or less similar to macro sites.
So how does the yield of small cell and lean towers differ?
See, when you plan a network infrastructure, since it's not a greenfield network, it's a brownfield network where there's an existing tower. So there'll be 2 layers of network. One is macro site, which will have an umbrella network in the area. Second one would be based on capacity requirement. When there is a high capacity network, they'll go and put small cell tower to take care of capacity and any gray area in coverage if it's there. So umbrella network would come from macro or link tower, and then a second layer of network would be from small cell. for providing you a very seamless network for 5G.
Okay, so see, like Indus is planning to planning hard on the addition of lean towers. Are we planning to add those?
Yes, so we are on a final stages with one or two operators to close the agreement for return, and out of this 4,500, what I've said, 3,500 would be macro and lean put together, and 1,000 would be small cell. So more or less, lean tower will come from VL and macro sites will come from BSNL, and small cell would be between all the operators.
Okay. Thank you so much, sir.
Thank you.
Thank you. We'll take the next question from Prathamesh. Prathamesh, you can go ahead.
Yeah, am I audible, sir?
Yes, you are.
Yes.
Yeah, so just couple of questions. Firstly, how is the progress going on the 5G rollout?
Pratyush, 5G rollout, see, Airtel and Jio has already completed more than 50-60% of 5G rollout. If you see current scenario, VIL is the one who is very aggressive on 5G rollout because they're just starting. And their main rollout will come from September onwards, when BSNL will be doing 4G rollout right now. And after 1.5 years down the line, they will also do 5G rollout.
Okay. And so we are hearing that BSNL has delayed their execution by 3 months. So what's the update on that?
So I think it's the old news where we see, if you see BSNL installed 4G tower almost 6 months back, and there was problem with the stability of Tejas network, mainly microwave connectivity, which is now been stable and it's working absolutely fine. And BSNL has started pushing rollout from August onwards. So they are planning a very aggressive rollout September onwards itself. Because the issue with Tejas network of microwave connectivity has been resolved, which was in Punjab. Mainly they started the launchpad in Punjab, and all the issues of Tejas equipment have now been sorted out.
Okay, okay. And so just a last question on the unit economics of towers. I think as we are adding around 4,500 towers for FY25. So how much is the revenue per tower and EBITDA per tower? And also the capex cost per tower that we will be needing?
So see, in terms of revenue, in terms of EBITDA, it would be maintained at the existing level of around 60-62% would be EBITDA on an overall portfolio. Revenue for macro tower would be around 30-35,000 on an average. For small cell, it's around 16-20,000 on an average. And what was the third part? One capex. On an average, we are saying between combined portfolio of 4,500 sites, which consists of macro, lean macro, and small cell, we would need around 10 lakhs capex per tower on an average basis.
Okay, sir. So I think 30 to 35,000 and 16 to 17,000 on small cell. This is monthly rental.
Monthly rental, monthly IP fees and rentals, revenue.
Okay. And capex cost, can you please repeat?
Capex on an average basis would be 10 lakhs for ruling of 4,500 sites. Average per tower capex would be around 10 lakhs.
Okay, okay. Thank you so much, sir. That's it from my side and all the best.
Thank you.
Thank you. We'll take the next question from Akshay Jogani. Akshay, you can go ahead.
Thank you for the opportunity. So my first question is if you can help us understand on the balance sheet, you have last year, I mean FY23 annual report, there are some related party transactions. Just sort of wanted to understand specifically to one was reimbursement and second was loan given to a promoter entity. So if you could please help us understand what are they and should we expect them to continue going forward?
In terms of reimbursement, I think it was in FY22 where there was a 21-22 where it was a COVID period. So as you know, all the town is power, electricity supply. And since my all the office across Mumbai or across India were not working due to COVID restriction, we were paying electricity charges from the promoter private account, and then we transferred that to promoter. So which is not continued anymore. I think FY23 any major reimbursement cost. It was before that, because of COVID issue, we were forced to pay electricity payments from the prior, because only one office was operational from which we are paying all the amount of electricity. So which is no more there, and it's a reimbursement is now happening only from the company's account. And in terms of related party loan, it has been recovered. It has been recovered, so it's no more than on books.
Okay, and we shouldn't expect that to continue, right? Like
No,
going.
no, it will not continue now. Since we
Okay.
already have a big capex plan, it will not continue.
Okay. So second is wanted to understand that you said in one of the previous questions that when one tenant gets added to an already existing tower, you give in a macro tower you give a discount of 10%, which is 2,000 rupees. So does that mean that typically one macro site, a typical monthly rental is 20,000 rupees? Is that correct?
So that's not a revenue, that's an IP fee. So see, it will vary.
Okay.
Now, if it's a ground-based tower, it will be 3,000 rupees, 30,000 rupees as an IP fee on an average 20 to 30,000. If it's RTT, it can be between 90 to 21,000 as an IP fee. So it will vary as per site type. But on an average, 2,000 rupees discount goes. So it will be less than 10% only.
Okay, and that is IP. And then the loading charge is typically how much?
What?
The load. So this is only a discount on the
Loading-
IP fee. You only give discount on the IP fee. Is that correct?
Right. So loading
And
charges typically on macro tower is 7 to 8,000 and small
okay,
cell is around 4,000.
okay. So typically a small cell can have only one tenant, or can they have multiple tenants?
You can
Because
have multiple tenants.
it can have, right? What would be a tenancy in the small cell piece?
Right now, our tenants in small cell is 1.2 because it was only done majorly by Airtel and Jio. Now with Vodafone ruling out, we are seeing it to reach 1.5 or something. Let's see how it goes out. But current tenancy is 1.2.
Sure, sure, sure. So I have I have one more broader question that let's say when a Vodafone or a Airtel or a BSNL or Reliance decides to sort of put capex and expand its network, right? It has a choice to go with its own tower co, and then it also goes with say you or a Cloud Exotel or whoever it is, right?
Right.
This how do they go about choosing this, and what is the framework, and how do we end up winning, and which are the reasons why they end up choosing us versus them?
So every operator has a different strategy. Like if it's Airtel, Airtel will always go to Indus first because they have almost 49-50% of stake.
Correct.
But Airtel recommend is so huge that first Indus will not be able to deliver alone. Second, there are very critical areas where Indus don't go and build site or because of whatsoever reason, which Daniel I can't quote. So they will also look outside Indus. And outside Indus, Suyog is one of the best performing IP company. For them, there are two critical criteria whenever they select any IP company for delivering. One, what is their uptime and how they are maintaining the tower. Second, whether they are able to provide us the location which they want and at what speed. So if you take these three parameters, we are one of the best performing company in terms of uptime SLA, in terms of speed of delivery, and in terms of location. We are the best performing IP company. Hence, whenever Airtel wants to see outside Indus, it has to be Suyog first because of my existing performance. If you say we take Reliance Jio will have their own, they will try and build their own site at first priority.
Correct.
And when they're not able to build site, they will pass it on to IP company. Now, for them, all IP companies same. They don't have any tie with Indus or Suyog anyone. So again, based on the performance, they will select the IP company.
So, but
VL is open to everyone. VL don't build their own tower. They hardly have any stake in Indus now. So they are open for anyone.
Sure, sure. So in that case, given that a company like Indus or a data infra trust, which are present in a lot more places than we are, right? How is it that like location they may not be able to come up with the right location, but we may be able to? I'm just trying to understand because we wouldn't have the bandwidth that they would have, right? Given their presence everywhere.
In terms of bandwidth, yes. If you see a money power bandwidth, I may not have same as Indus. But my bandwidth would be very similar or better than other peers in terms of execution and cracking a right side with a different type of innovations. So that's the advantage which I get on field because we are the one who work on field. We don't have any big corporate office where we just give order. If you see most of the time I am traveling on field, I am going on site. So the team which we have is, and I can confidently say it's far superior in executing work on ground.
Sure.
More than that, I can't reveal because then it will about revealing business secrets, which I can't do on a call.
No, certainly. So the last question, if you can, on typical capex for macro ground-based versus a small cell, and then revenue, but essentially, how do we think about the payback period of these assets?
Yeah, as a thumb rule, what we have is we try to maintain EBITDA of 60-65%. So that we have a payback of, say, around, if it's a single tenancy site, we normally have a payback of 3 years. And if tenancy comes into, then it goes down to 18 months or 2 years. That's the model on which we work whenever we create any site.
So why does a telecom company, I mean, this looks very attractive, given that telecom companies are also on these towers themselves or have known, why do they agree to such economics? Like they could easily say, no, okay, why should you make the payback in 2 years? I want you to make a payback in 5 years.
As a business, I'm not getting any premium rate. If you see my IP fee, same to my competitor, whether it's Indus Tower, whether it's Cloud XL, whether it's XYZ company, I don't have any premium charges compared to them. My charges will be very similar or a little bit less than them. So if I am able to build efficiency into my own system, they are not worried. They will be worried only when I charge them more than the other competitor, which is not the case.
Yeah. So is it possible that our capex is much lower for the same product than other people's?
So not much lower, but yes, lower than the other peers.
And what would be a typical capex for a ground-based tower?
Ground-based tower would vary around, say, 12 to 15 lakhs.
12 to 15. And a small cell would be what, 4, 5?
4 to 6 lakhs.
Okay, sure. I'll come back in the queue. Thank you so much.
Thanks, Akshay. We'll take the next question from Darshil. Darshil, you can go ahead.
Yeah, thank you so much. So just one question was on this last call we discussed the company was into the ASM and the listing was some issue, but as of now the company is removed. So any news on that?
So very soon we'll get a good news on NSE listing. So now we are not into ASM, as you see, ASM has been removed.
Right.
So we are obviously working very aggressively on NSE listing.
Any timeline that we can expect?
We'll not comment on that for now, Darshil.
I go ahead, huh? Vinay, you were saying something.
Yeah, I'm saying we'll not comment on that for now. It's
Right.
a process where we can't.
Okay. And sir, the other part was what would be the borrowing that we will do for this year as we are going into 300 crore capex?
As of up to Q3, I have enough provisions of funds through internal accruals and the warrant where promoter has himself invested 60 crores, out of which I think 40 crores will come in this year, plus internal accruals. So I have provisions up to December. And post December, we'll see how we want to raise funds or we want to go for debt or something. So as of now, nothing has been finalized in terms of raising funds. Up to Q3, we have enough cash to roll out our sites. So maybe by the time we do Q3 call, we may be able to give you more clarity on it.
Okay, got it. And sir, if I'm not wrong, we have given a guidance of 35 to 40% for FY24, FY25. Am I right? One of the presentation it did mention.
You know what?
What was the guidance for FY25 that we have given?
In terms of revenue, you are saying?
Yeah.
So see, basically, currently my sites are 4,000. I have 5,000 plus tenants. I'm going to double it. So you can take a proportionate of say 3 or 4 months average and add to a revenue. Because obviously the entire year benefit I'll get in FY26. But if I roll out this 4,500, 5,000 sites in next 3 quarters, you can take an average revenue add to my existing revenue. You'll get the revenue numbers.
Okay. And for FY20, am I right?
We are targeting as of now. That's what we aim to.
Yeah. So, but we are almost spending around 600 crores over the next 2 years. So, do you think the asset turn for us is very low in this as compared to what we really have right now?
No, whatever capex I do it in FY26, I will get full year benefit only in FY27. Like whatever rollout I do in FY25 in the next 3 quarters, full year benefit will only come in FY26. Same thing will happen with the capex of FY26, where I invest huge, let's say around 300 crores in FY26. I'll get actual benefit in FY27.
Okay. All right. I'll get back into the queue, sir. Thank you so much.
We'll take the next question from Guneet Singh. Guneet, you can go ahead.
Hi, sir. So, thank you for this opportunity. I'm new to the company. So, in my understanding, we would be erecting about 4,500 towers in FY25, right?
Right.
So, I mean, what kind of capex is required for these 4,500 towers itself?
So, as of now, it's around 10 lakhs per tower on an average basis. So, it should be around 450 to 475 crores ka capex.
So, sir, how much of that would we be borrowing?
See,
for
as
this?
of now, we've not finalized anything on borrowing. As of now, we have enough internal accrual provision, plus we have some bank debts approved, and a warrant has been issued to promoter from where I am getting around 40 crores odd. So we have funds to do all the capex rollout up to end of Q3. By Q3, and we'll give you clarity whether we want to go for borrowing, we don't want to go based on the funds availability. But as of now, no borrowing plans have been finalized till now.
All right, and sir, with this capex, I mean, what kind of depreciation would we be looking at for FY26? And how do we depreciate these
It's
assets?
5.5% depreciation method, straight line method.
12% depreciation. So,
5.28.
sorry,
5.28%.
5.28% depreciation. So on 450 CR, we would be seeing about 23 CR depreciation for
Right.
FY26.
Right.
All right, sir. This is a very interesting business, and I wish you all the best. I'll join back the queue for any more questions.
Thank you.
We'll take the next question from Mani Kumar. Mani, you can go ahead, please.
Yeah, good afternoon, all, and thank you for giving me this opportunity. Sir, you were saying in the presentation, just few queries, one or two. In the operator wise, you were saying around 3,000 towers will be done for the BSNL and Vodafone. Can you please throw some light? What would be the revenue breakup in terms of BSNL for FY24 and this upcoming FY25?
The revenue in terms of per site IP fee is almost same for all the mobile operators. So it's not that BSN is going to give me some premium or they're asking for any discount. Revenue from BSN, VIL, Airtel, Jio are on a very similar basis. There would be hardly any difference. There would be some difference, obviously, but not very much, not a notable difference. So
Okay, so
all mobile operator is almost same.
okay, revenue from all of mobile operators are same. That's
Similar.
okay. Okay, sir. And next is in the presentation, it is said that the locations will be identified, whether it is urban or slums locations, and after building tower, you will get the rental from all the operators. But recently it is also said that you will identify the location and you will build towers. So means I did not get whether you will take the site identification by telecom operators, or you will identify, you will build, and you will get the rental income from the operators.
So I will give clarity. Any locations are finalized by mobile operator because they are the one who are planning network. We don't do network planning at all. They are the one who do the network. So as a process, every month on one basis, every circle of mobile operator share a list with me that these are the locations in which they want a mobile tower.
Okay.
I will go there and identify a suitable option within 100 meter where owner is ready to give their ground off there, which we again send back to operators that these are the 2 or 3 places within 100 meter periphery where we can construct mobile tower for you. Then their technical team will go do a proper survey and confirm me back, yes, this location is suitable at X height and X type of tower. Based on that, I'll construct a tower and sublease it to mobile operator where I'll get IP fee, loading charges, rentals and everything.
Okay, okay, yeah, sir. And the last question is, sir, regarding depreciation. Means you are saying you will be upgrading the battery packs to give this 99.7 kind of operator efficiency. So means how do you consider this depreciation in terms of revenue percentage?
We follow 5.28% depreciation as a straight line method. So whatever installed as per the RFI date, 5.28% depreciation is applicable on all the equipment, whether it's battery bank, whether it's tower, everything.
Okay, so maybe approximately we can say maybe 12 years and more we can use this product efficiently by considering the depreciation benefits.
Right, right.
Okay, okay, okay. That's all from my side, sir, and all the very best for the future growth. Thank you.
We'll take the next question from HC Daga. So Daga, you can go ahead, please.
Thank you. Please excuse me, I have joined late. So if you can kindly give your revenue and then the operating margins plan for the 24, 25, 26, if there is possible.
So what I have shared right now.
शर्मा जी को बोलने दो regarding this. Tushar.
24-25 we are targeting around 195 plus CR as a revenue. Hello.
Yeah. Yes,
And
yes.
26 is more than 320 plus.
Okay.
Right now we are targeting for next 2 years.
Yeah. And then the operating margins, please.
Operating margin is more or less 65% EBITDA.
Okay. Wonderful, sir. Thank you. All the best.
We take the next question from Raj Makwan. Please go ahead.
Hello, am I audible? Hello, am I audible?
Yeah, Raj, you are audible.
Yeah. So for FY26, you have given a guidance of 320 plus crores of sale. So it includes BSNL, right?
Yeah, it includes everything.
It includes the overall sale, consolidated.
Yes.
All right, thank you.
We'll take the next question from Rohan Patel. Rohan, you can go ahead, please. Rohan. We'll move on to the next participant, Siddharth Agarwal. You can unmute and ask your questions.
Hello. Am I audible? Hello.
Yes, Siddharth.
Okay. So my question is, so we have planned for 4,500 new towers in this year, and roughly another 4,500 towers for the next year. So I'm assuming that we have this visibility. The 320 crore turnover, the guidance that we have got for FY26 is just based on exit tower tenancies as on FY25, right? So potentially it could be higher depending on how FY26 tower rollout actually happen throughout the year, right?
Right.
Okay. That is question number one. And the second thing is we keep on hearing these aggressive rollout plans from both BSNL and Vodafone, who have lagged behind in tower rollout for both 4G and 5G. And the numbers that we are hearing is in multiple lakhs of towers are needed for both the companies in the next few years. So for us, how do we see the opportunity, for the next few years, and what prevents us from capturing a bigger pie of this potential opportunity out there?
So as of now, opportunity is very high. It seems like you can easily say sky's the limit if you want to do a major network rollout for both the companies. Now, why we are saying this number? This number is based on our financial capability, what visibility we have with the funds. So if we are able to improve our funds visibility, say next quarter or after 2 quarters or after 3 quarters, we will again revise the plan. But current plan is based on the current funds visibility. So you are right, we can go for a bigger pie also, but that will require a lot of planning because it requires huge capex investment. So as and when we are able to free the funds plan, we'll keep revising our targets also.
Okay. So basically the guidance that we have now seems to be the base case, and depending on how quick the rollout happens and how better visibility we have on the funds, these guidance can keep on getting upgraded.
Yes.
And also FY26 top line is relatively very conservative because we'll have some significant rollout also happen in Q1, Q2, Q3 of FY26, which should also contribute to the top line.
So I'm keeping my finger crossed like you.
Yes. And one more question on that is we say that our EBITDA margin would continue to be around 60-65%. But I'm expecting that our tenancy ratio would keep on increasing from where it is now, especially, when for the same towers, we could have multiple tenants. So wouldn't our EBITDA margin overall at the firm level keep on increasing?
right now we're not seeing a major. Yes, there will be surely an improvement of sharing, sharing ratio, tenancy ratio. But since BSNL is going ahead with a very different strategy of rural network, we don't see a massive jump in tenancy. Yes, there will be a jump in tenancy, but not massive. Hence, we have as of now maintained it at the same level. But as and when we get more and more clarity from operator, yes, it can further improve.
And finally, the last question is, currently we still continue to be majorly Mumbai and Maharashtra-based, company in terms of our revenue. So after, say, FY26, when we have almost 15,000 tenancies across India, how would that regional spread of revenue look like?
So it would be spread it more or less in 15 states of India, with still Mumbai and Maharashtra will dominate, but not majorly like what is right now or what was it 2 years back. So there will be a decent share of revenue which will come from 15 states of India, which are my targeted states.
Okay, so it would be a lot more evenly spread. Maharashtra would
Yes.
continue to be a dominant share, but can we expect, 30-40% of incremental revenue comes from states other than Maharashtra?
Right. Absolutely.
Great. Thank you very much. I'll come back in.
Thank you. We'll invite Rohan Patel to ask his questions now. Rohan, you can go ahead.
Hello, am I audible?
Your voice is coming in a bit low.
Now am I audible?
If you could speak up a bit louder, that will help.
I hope so. Now I'm audible. Hello.
Yeah, go ahead, Rohan.
Yeah, I just wanted to ask a question. We are seeing that there is definitely more density required for towers, and can I know that we are planning to add 4,500 towers in next 3 quarters, but as an industry, how many towers are required for say next 3 years, and what kind of market we want to capture?
So I will quote a report of DIPA, which is an Digital Infrastructure Provider Association. So there was a report and study which was published by T.R. Dua, who is the head of DIPA. To provide a seamless 5G network across India, we need around 12x tower across India. Out of 12x tower, 6x existing tower, which will get converted to 5G towers. So there is a scope of another 6x tower to come up in India down the line, 2 years, 3 years, whatever operator plans. So in terms of opportunity, there's a 6x tower which are there to be rolled out in coming years in India. Out of which we are planning, as of now, our plan is based on our current financial capability, which is right now. As and when my financial capability improve, I will go for a bigger share of pie. It will be keep revising every quarter, every year. We have to keep revising our targets. Hello.
Hello.
Yeah,
Yeah. And as I'm new to this industry as well as to this company, I was going through some updates regarding 5G. There's also as much as there's a need for tower networks, there's also a need for DAS system and in-building solution system. So are we anytime planning to get into that? Because that is also a very important thing for a 5G rollout.
Even if you have seen my presentation, we are going aggressively for FTTH rollout. So DAS system would be more or less outdated down the line 1 or 2 years. Every building will have fiber rather than coaxial cable DAS, then fiber DAS. So we are working on FTTH. We have already started rolling out FTTH sites in Mumbai, Maharashtra, West Bengal. But industry is not matured. We are seeing a FTTH boom will come down in 2 or 3 years and will be ready to take all the benefits of FTTH as we already started working on FTTH rollout. And we are taking that vertical very seriously. And we are seeing a good percentage of revenue coming from fiber and FTTH down the line 2 years.
Okay, so I can assume that FTTH is a more advanced technology over DAS and IBS, and you are pursuing to get into FTTH.
Right. We already started FTTH.
Okay. Thank you. That was from my side.
Yeah.
Thanks for the time.
Thank you. We'll take the next question from Yash Ginoria. Yash, you can go ahead, please.
Am I audible?
Yes.
Yes, so my first question was, what is the maximum number of tenancies we can have on a tower, on a macro tower as well as small cell towers?
Since we have 4 operators, maximum tenancy go to 4.
Okay. And so my second question was, do you all require some environmental permissions for erecting the tower? Who is responsible for those permissions?
Require any environmental clearance. If we install DG, that to static DG, then we may need. But all my sites are green sites which are powered, and we don't work on DG. Yes, we
Okay.
have a mobile DG project which goes as and when required if there is a longer power outage. Others, all my sites are green sites with power by electricity.
Okay, sir. Understood. And sir, one more thing. Okay, sir, I'm done with my questions. Thank you.
Thank you. Hello. Vinay? Hello.
Hi,
Vinay?
Rishi.
Yeah.
Yeah.
Rishi.
Rishi, you can just go ahead with your question, please.
Okay, thank you so much for the opportunity and congratulations on good set of numbers. My specific question was on the margin front. As you said that 2 3 years down the line we are targeting a margin of what around 60-65% EBITDA level. And right now, if I see, I'm right now looking at the statement, we are around at for FY24 we had 70% margin. So any specific reason we are seeing a decline in margin eventually because as the company grows, the some or the other way the operating leverage must kick in a way. So, or was it the FY24 being very exceptional year in terms of the any specific expense or in terms of revenue?
ऋषि लास्ट ईयर आपने देखा होगा हमने नंबर ऑफ टावर्स बिल्कुल भी ऐड नहीं किए हैं जो भी हमारा रेवेन्यू इंक्रीज हुआ है वो ड्यू टू द टेक्नोलॉजी अपग्रेडेशन हुआ है लोडिंग चार्जेस की वजह से इस वजह से हमारा जो मार्जिन है शूट अप हुआ है थोड़ा दूसरा उसका एक रीजन ये है कि वोडाफोन का जो बाय डिफॉल्ट प्रोविजन करना पड़ता है हमको एज ए बैकअप वो हुआ है तो इन दोनों की वजह से मेरा मार्जिन थोड़ा शूट अप हुआ है बाकी मोर और लेस अगर आप मेरा प्रीवियस हिस्ट्री देखोगे तो इट्स अराउंड 65 to 66% ओनली नॉट मोर देन दैट और बाय डिफॉल्ट अपने हमारे जो टावर इंडस्ट्री है इसके अंदर 65% का ही मार्जिन होता है ईबिटा होता है उससे ज्यादा नहीं जाता
Okay, ठीक
है
thank you so much for that. I'll join back.
Thanks, Rishi. Mr. Gaurav, you can please go ahead and ask a question. Mr. Gaurav?
Hello.
Hello. Yeah, your voice is a bit on a lower side. You can speak up louder.
Can you hear me?
Yeah, we can hear you.
Okay. So, yeah, my question was around the master service agreement. Are these master service agreements signed with all the operators at a similar time, or they are signed at different intervals?
I did not get your question. Can you repeat? Your voice was not clear.
I'm talking about the master service agreements that you have signed with the four operators, Airtel, Jio, Vodafone, and BSNL.
Right.
I assume these are signed at different intervals with these operators. So these MSAs, when they come up for review? Uh, is it after a period of 10 years or maybe earlier than that?
As of now, it's around 15 years period with all the operators. It will come around after 15 years. So as of now, still we have enough 8 to 10 years period left in all the MSAs. BSNL has just been renewed, so it has 15 years ka pending period, and all others will have 8 to 10 years ka minimum pending period.
Okay, and then these MSAs that are signed with the operators, they are similar for you and all your other competitors. The terms won't be very different.
Right.
Okay, and when they are so just a benchmark, what you've signed with BSNL, which is the latest one, are the numbers slightly in your favor, or have they gone down from the last MSAs that you have signed?
It's almost similar. There's no major change in the numbers.
Okay, if there is no change in the terms, then how do we account for the inflation and other expenditures that may go up over time for the sub providers?
We have inbuilding escalation of 2.5% on IP fee, which I mentioned in my MSA slide. So by default, IPF of every site increases by 2.5% every year, which takes care of salary increment and other inflation.
Okay, okay. That kind of answers my question. Thank you.
Thank you.
We'll take the last question from Mr. Guneet Singh. Mr. Guneet, you can please go ahead and ask a question.
Hi, sir. You mentioned that till Q2 we have funds in place for the capex. So, I mean, how much capex are we planning to do till Q2? And can you just like help me understand the amount of cash that we have currently? You mentioned that you raised 40 crores from warrants.
Right.
So I just would like to understand the source of, I mean, the capex, since you mentioned that you're not borrowing.
I will not be able to answer a question at the exact numbers, but yes, we have planned around 4,500 sites for next 9 months, which will do evenly on quarterly basis, more or less. So, and we have enough provision for Q2 and Q3 both. In terms of 40 crores, which I said, if you have seen the BSK bit, we had done warrant to promoter last year, out of which 40 crores are expected in this financial year. So more or less, it has come close.
All right, sir. We generate about, I mean, how much EBITDA do we generate per quarter? So we generate about 30 to 40.
Amount of internal accruals, which takes care of my capex up to Q3. Between internal accruals, promoters fund, and some debt, we have enough funds for Q3, up to Q3, not up to Q2. Up to Q3, and we have enough funds.
All right, sir. So up to Q3, how much of capex would we have concluded as per internal?
To give you breakup quarter-wise of capex, it would be revealing my exact plans of every quarter, which really I don't want to reveal at this point of time.
All right, sir. So what are the average number of tenants per tower that we have currently?
So for macro, we have around 1.8 and small cell 1.2.
All right. And sir, what is the expected revenue per tower per tenant from the 4,500 towers coming in?
So you
on
can
average?
see, like what I said, my revenue would be doubling. So you
Right.
can do the calculation. It would be exactly the same. Current revenue would be maintained per tower because we're not giving any major benefit to any operator.
So which is around, what is the average revenue currently per tower?
You can see now my top line is around 166 crore and I have around 5,100 tenancies. So you can easily get the
25K per tower. All right. So, I mean, we are factoring that we would be having about, on average, 1.5 to 1.8 tenants per tower, I mean.
right 1.8 and 1.2 for spots.
All right, sir. That's all from my side. Thank you.
Thanks, Guneet. We will take one last question from Mr. Rohan Patel. Mr. Rohan, please go ahead.
Thanks for the opportunity. Just a question regarding a towers. I just wanted to understand, like, when we build one tower, like, what would be 4 to 5 most important components, or I can say, like, main components that has 60 to 70% of tower cost, if it's possible to say. Like there are microwave antenna, base station antenna, and
There are all these what we are saying antennas are part of active equipment which I bring by operator only. For my major 3 components in terms of capex are tower structure, SMPS, and battery bank. These 3 constitute 2 major costs of my tower.
so and rest all it's bought by
Getting electric meter, some cables would be there. There are multiple small elements which come into tower, but major cost will go to battery bank, SMPS, and tower structure. But there would be civil work, there would be earthing, there are many. It's a big BOQ for any tower.
Yeah, thank you.
Right. I think that was the last question for the day. Tushar and the management team, would you like to give any closing comments?
I think we are here to give and shareholders the returns which they are expecting, and we are sure of delivering what we are committing to them on this call or even in all my future commitment. Will ensure that we deliver all our commitments. Sir will have. Sir, आपको कोई closing?
My point is only that looking toward the industry of telecom, we are the upsides are only coming because of the three players, basically the market was being captured by Airtel and Jio. But later on, the development of the BSNL is now see that 25 lakhs customer has gone. Ultimately, we are the active, passive part we are only doing. Active part already orders has been given by all the operator. For Vodafone, Jio and Airtel, Ericsson equipment is available. And BSNL is knowing to be the Indian company, it is given to Tejas. So make in India, they are making. So all the orders are in place of the operators. So we have to deliver the goods. And we are seeing the every operator now last 1 month before operator has increased their tariff also. So looking the capex is not from our perspective. We should look at our customers who are giving payment to us. They are also in a safer zone now. And that gray zone, I think my CFO was and Tushar has given excellent presentation regarding all these things. But the customer views also clear that market and looking to this sector, there is no threat or no any type of AGR has came. Looking forward, there is no any negativity is saying. So only Suyog has to deliver the goods, properly placed the thing, and government is also stable, and digital utilization of all the datas are there, all fiberization work is there. So we are searching for better and better opportunity to make the India more digitalization. All the banking sectors are there, and mobile use, without mobile we can't live now. So range is also required. Voice has reduced, but data has increased. So fiberization of all tower, also one of the new aspect will come to our Suyog feature. And we are also agreement with all the government, NHI, MSRDC, MMRDA, monorail, and we are looking forward new areas where the new expansions of cities are happening, smart cities are coming, under construction are there, and one stable market for looking the goal of 15 to 20 years. These agreements are in place. Now we are in 2024. And if you consider this is 2040, the vision is very clear. So I request all the who are participated here, ask the question, and we are happy to see your views, and we take consideration of your notes, and we will more clear, and we will shortly list in NSC also. But both the listing will complete, then I think the picture will be more clear. So I thanks from my Suyog team who participated in this investor meet, and thanks to organizer, and we wish all the best to all the other people who are joining and looking forward toward you. Thank you very much.
Thank you so much, Latureji. And thank you to the entire management team of Suyog for coming on the call. Thank you to all the participants for joining on the call. We now come to the end of this call. Thank you so much.
Thank you.